What's up, investors? How is everyone going? How's everything doing? I hope you guys had a great week in the market. We're going to be looking at Qualcomm today, which is the ticker symbol QCOM or QCOM. So this company was got a pretty big upgrade. It's been waiting for this 5G revolution to kind of come to fruition. The overall 5G ramp up. Who's going to be the leader? Who's going to be the lagger? Bada bang, bada bang. And a lot of people, a lot of upgrades, especially from Citigroup, is saying that Qualcomm is one of the biggest competitors within the markets, allowing a lot of different companies, everything from Samsung to Lenovo and different various other IT and tech companies, to be able to pursue 5G connectivity. So 5G, if you don't understand what it is, it's basically just extremely fast networking processing over the Wi-Fi or over the network, and not being tethered to an Ethernet cable. We're talking pretty like 10x speeds on what you're used to. Sometimes in some points a lot higher. So this 5G tech is going to be super revolutionary within the 5G movement. So basically, like as the some of the investor notes come out, this is the long-awaited 5G ramp is here to come. One of the most exposed stocks within the 5G ramp up is Qualcomm in 2020, and this company will experience accelerated revenue and higher EPS growth, so that's earnings per share growth, by the beginning of the 5G cycle. The 5G cycle could last multiple years. They actually did note the worry of Apple not having the processing power, or will take them at least 12 months to get on board and develop something for their phone. That being said, they have coming Q1 2020 earnings results on February 5th. So once we head to the charts, we'll have to be mindful of that. That being said, anything can happen again. It's a crapshoot when it comes to earnings, but we've purchased some calls here. You can see here on my account, I have everything liberaled out. Yeah, so I have my wonderful little Qualcomm calls here. Make a nice little hefty little profit here. Very nice, very nice. Get those calls going. And that being said, I think it's going to be an overall great investment within Qualcomm to be one of the leaders. And there's a lot of other companies that we can dive in a later video on the 5G cycle. Technically speaking, this has been a fantastic day, hitting an all-time high year to date. Let's go look at a longer period chart. So this is a weekly 3 years, substantially higher. You get a lot of these swing up, swing downs because it is a semiconductor business, and you kind of get the growth slow down. But a lot of this stuff was due to the lovely Apple closure deal that they had, where they had to settle with Apple on some things there. That's that huge influx there, and being the number one provider, honestly, with a lot of the 5G stuff moving forward. And a lot to do with, and then the past last year prior to that was this sell-off that we kind of had into late 2018, and then the kind of the ramp up from 2019. So that being said, this is poised very well technically and fundamentally. This is why we're buying more calls if possible come Monday. Charting wise, it's looking very well. It's on hitting all-time highs today. Volume you'll see up right here is, again, this is not crazy volume. So this volume over here is really hard to compare. So we're just going to go to like a 3 year weekly chart. You see here on this weekly, we are above average, just slightly, maybe about 30-40% higher than average. And that's been kind of consistent even back in November, when it did have a nice little push up. But the trend is still higher. You can see here it's still blue lines, so that is still pointing upwards to the right. And like we said, they have earnings on February 5th, so that's just right around the corner, about 3 weeks away. You have seen here it has jumped couple times on earnings and some of it times selling off. So again, earnings are a crapshoot, but if you're holding it for the long term, it's been going up to the right. You can kind of see it just on the chart here, really sticking close to the yellow line, which is the 21 EMA. I have a 89 price target. This is where I would like to add more if it comes down to it. Potentially after earnings, this could hit that price if it goes down to that point. It's fairly close to its 200 moving average as well, or exponential moving average, which kind of tells me that if it tries to come down, it has a nice little support there to potentially jump higher. So I wanted to look on the deviation channel. We did pop out of the third deviation channel, and like we say here, it kind of takes a little bit of a break. It could trade sideways like it has here, and just kind of consolidating and letting everything kind of catch up, and so forth, or it can kind of break down. Again, if any bad news comes out, this could be a thing. But it's the trend is still up to the right. You can kind of see it kind of swishbuckles around the second deviation. So the second to third, it usually comes back to the second, and then potentially to the mean. That being said, this is going to be a long-term play for myself. So I'm going to be buying any opportunities where it gets a little below the 21 on a daily chart. So around the $89 level, I would be adding in. Would I be adding in right now if I'm not in the thing? It's kind of difficult. It's easier to do it with some option spreads. You can just sell a couple puts, or you can do like some put spreads to kind of get a little backage there, not having to go naked. But fully understand that this thing could pull back because it has had some pretty massive swings here through its life cycle. So that being said, please let me know if you guys want to see more analysis. Down below. Let me know on what potential stocks you want to be looking at and so forth. If you found this interesting, please hit the like and subscribe if you haven't already. Again, guys, thank you so much for watching. This is Ken for the Dyslexic Investor. I'll catch you guys on the flip side. Peace.